11:35 on a Big Show clock. Bob Quinn in the Big Show today. Plant 26 moving along, and we have been talking amongst ourselves here, and we think this could be the week that was for planting here in the state of Iowa. I'm not going to say we're going to be done, but I'll bet by the end of this week we're over 50% both corn and soybeans. Being brought to you by Des Moines Iron and Supply. Over a century strong. Visit DesMoinesIronSupply.com. All one word, DesMoinesIronSupply.com. Keeping Iowa farmers moving. You give them a call, they'll answer their phone. You need parts, they'll get them to you. They'll keep you running. You bet they have been only doing it for 100 years. They have got her down. Des Moines Iron and Supply. Hey, I need to remind you the word that could put a grand in your hand. That word this hour is coin. Coin. You take that to the radio station's website you're listening to right now, and you could be getting, well, first you have to enter the word into that little pop-up box. Then you could be getting a $1,000 phone call. The word this hour is coin. Brian Hoops with Midwest Market Solutions on the telephone line with us right now. Brian, we're taking a beating right now in corn and soybeans. Corn is down 10, 12 cents. Soybeans down 19, 20 cents. What's turned this market sour here today?
Yeah, you're right about that. Bean oil down sharply, wheat down double digits as well. A lot of these grain markets are taking it on the chin, and it really started maybe 5 o'clock this morning or so when crude oil started to drop. And we've had almost a $14 range from 5 o'clock last night in crude oil to the lows that were posted early this morning. And the market has come back off of those lows. But it was some comments made by the White House, President Trump, saying he believes we're very close to an end of the war with Iran, and that dropped us sharply. I think we've been talking about this seemingly for weeks and maybe months now, that once the oil situation will get straightened out, once we have an end to the war with Iran, we'll see a big drop in crude oil prices. And we've seen that happen here before, where we've seen some maybe a knee-jerk reaction where the market believed we were coming to an end of the war. It was kind of a head fake, and we've seen prices recover. And so that's what the trade right now here into the mid-session is kind of consolidating and trying to anticipate. Is this just a knee-jerk reaction? Is it some actual end to the war? The crude oil market has pared its losses, but the corn and beans really have not. A lot of the support for corn and beans, not all of it, but some of the support came because of high-priced energy prices and high-priced fertilizer, giving that farmer an incentive to plant the crop of corn and soybeans to make sure it got fully fertilized so that we'd have maximum yields. And once we get the crop planted, you mentioned maybe Iowa's going to be 50% done, we can start taking some of that premium away from the grain market. So we are seeing a lot of pressure in corn and soybeans, wheat markets as well. A lot of things are dependent upon what happens with the war, what happens to energy prices. If we don't see an end to the war here soon and prices, crude oil prices rally back from this mid-90s area back into the 105, 110, no doubt grains will rally. Most likely, if we do see an end to the war here in a few weeks, there's not a lot of fundamental reason to have corn prices $4.90 and above, or soybean prices $11.75 or above in the new crop contracts.
Well, and that was the key that we've been talking about with all of our analysts, you included, for the last couple of weeks, is watch the rallies, because they're going to come from unexpected areas, can we say, and they have. And so now you mentioned that we're taking that risk premium, or that premium at least, out of the market and getting a foot back into reality here. So when we get our feet back in reality, where do you think we're going to end up with this corn market, December and November soybeans in the next week or two?
Well, yeah, it's going to be very volatile. We could be, another 20 cents or more weaker. We could be 20 cents back to the plus side. Really depends on what happens with the U.S. and Iran and energy prices. It's very dependent upon what happens with crude oil. When you're trying to hedge your crop, it's very frustrating because you have higher energy prices that give you higher expenses of higher fertilizer and higher fuel costs, but it also gives you opportunities of higher corn and soybean values. Now, once we get a lot of this crop planted, like 50% of it, we usually take some of the premium out seasonally. month of May is a negative time for the grain markets. We usually trade lower during the month of May because we get the crop planted, it gets out of the ground and starts growing. Temperatures are expected to warm up here, and that will help emergence out. So there's not a lot of issues right at this time as far as weather goes to suggest that prices should remain at these levels or move higher. They certainly can maybe this summer if dryness in parts of the western belt continue to develop and we don't have much rain. That's a long ways away, and that's why it makes it hard for a producer. You have to either make some sales here or you have to buy some insurance that these price levels will be there at come harvest time.
Well, you mentioned oil. You mentioned the rumors circulating around or the news coming out from the Gulf of Hormuz. It looks like equities are buying into it as well. They're up 517 points on the Dow. We could be into uncharted ground here in stocks as well. Absolutely,
yes. Stock market really likes what's happening and is pushing into contract highs. Just you look at like the S&P futures, just as recently as March 31st, we traded as low as 63.53, and now we're 1,000 points higher than that in just a little bit over a month of trade. And the S&Ps have added a lot of premium into the marketplace. Gold and silver also like an end to the war. It's very, very beneficial for those markets. The dollar is weaker here this morning, which is a result of what's happening with the war and those concerns. And a lower dollar should equate to better export business for our grains.
Well, hey, Brian, we're going to get back with you in an hour and 10 minutes and put wraps on the day's trade today and maybe get some price outlook moving forward. In the meantime, if folks want to find out more about what you're doing there at Midwest Market Solutions, how can they do that?
Yeah, you can reach me directly. Phone number is 417-501-5132. You can go online to MidwestMarketSolutions.com and follow us on Twitter at Midwest Markets and at Brian Hoops.
Hey, 12:54 here on the Big Show clock. As we wind down our marketing day, Nathan's going to keep track of the markets through close and have the closing report for you coming up at the bottom of the hour at 1:30 on your Big Show radio stations. Brian Hoops with me on the telephone line, though. Right now, Midwest Market Solutions. Brian, we talked to you about an hour and a half ago. Want to ask you for some price projections moving forward. What are you looking for December corn and November soybeans over the next couple of weeks?
Yeah, I think we probably, for the day anyway, have put our lows in, and so maybe we can see some sort of a bounce or recovery. Corn would have resistance at 498 if we do see some sort of a bounce. Beans anytime back into the $11.88 to $12 mark. I think all those areas would be considered hedging opportunities, places of resistance that you would want to look at. And that's, again, provided that we have some sort of a rally or bounce. I don't think we're going to be able to maintain or sustain additional rallies during the month of May because of the decent growing conditions we have. Now, if we get into June and July without much rainfall, then we're going to change things around considerably. But I would want to increase protection levels, increase marketing opportunities, maybe through options or straight cash sales, futures hedges on a rally in the next week or so. If we get a bounce in the crude oil market, I think you use that to your advantage. And if we get a setback into the end of May or Memorial Weekend or the war comes to an end, you can always look at re-owning that crop then for a summer weather rally.
Brian, it looks like we got some wild weather creeping into maybe as far in as Kansas with some snow. Apparently, though, the wheat market's kind of shrugging that off because we're pushing wheat lower today as well.
Yeah, we certainly are. The wheat market, some of this crop has been killed off already several times. We had a frost back in March. We've had tornadoes go through Oklahoma, hailstorms go through a lot of the winter wheat plains. So we've really hurt this crop, and it's probably not going to get a lot better even if we get decent rains in some of the areas, especially the western parts of the state. But the wheat market's priced in a lot of this already. But if there is something that's going to be sensitive to supply issues in the next 3-4 weeks, it's definitely going to be the wheat market because we have hurt this crop substantially. Exporting what we have after we harvest it, that's going to be another issue. We probably won't be able to, but we'll build some supplies a little bit here. But yet at the same time, we're going to have reduced supplies. Oklahoma Wheat Commission downgraded their crop to only about 48 million bushels for the entire state. So very small production numbers from one of our leading winter wheat states. Just an indication that this crop has already been damaged and is not likely to add bushels, even if we get good growing conditions going forward, let alone some bad conditions.
Hey, Brian, how can folks talk markets with you if they'd like to do that?
Yeah, you can reach me directly, 417-501-5132, or you can go online to MidwestMarketSolutions.com.